All right, everybody, this is part two of our Covert 10X stocks review. If you are coming from the first video, we are picking right up where we left off. This is ticker symbol OGN. Again, we are looking for Covert 10X stocks. So jumping right back into where we were, uh, wow, they used to make 9 billion. Now they're 6.5, 6.3, 6.1, 6.2. Now we're back to 6.4 for the trailing 12 months of 2024. This looks promising. It is very severely undervalued, but look at this debt right here. Holy cow. That is a major. We have to go and check that out. That looks like a glaring red flag. Let's just see. 8 billion in debt. Total assets 12.7 billion, total liabilities 12.2 billion. They are on the verge of when assets exceed liability, when liabilities exceed assets, they've been in trouble. They were in trouble 2023. 2023 was not a good year for them. Oh, absolutely. The stock went from 32 to $11 and then it jumped from 11 to 22 and now it's going to go back retracing. Wow. And they're offering a dividend? They need to be paying this dividend to themselves because they are in so much debt. Why are they giving a dividend when they're in that much debt? I will never understand companies like this. They owe $8 billion. How much were they paying off? 8.7, 8.7, 8.6, 8.8, 8.7, 8.6, 8.7. What the heck? I can't even run my calculation on this. Actually, I can, but it would come out to be a very. I can just run it. I'll run it for you guys because I want you to see where I think this stock is going. Unfortunately. Okay. Market cap is 3,780,000,000. Income 1,300,000,000. Sales 6,410,000,000. Whoops. Whoa. 6,410,000,000. Yep. Okay, now we're gonna go down. Cash 763 million. Insane. Debt, the fun part, 8,739,000,000. Absolutely insane. Assets 4 point, or I'm sorry, total assets 12.7, total liabilities 12.2 billion. Again, that is a very fine line. And this stock is makes me nervous, man. Makes me nervous. 257,540,000 shares. This is a $13 stock trading at 15. I was thinking it was going to be single digits. And they're also giving away 7% of their cash. Why? They need a. How much interest are they paying on that debt, by the way? This dividend, this man, this, I know my calculation said $13, but I think we see it go lower than 13. We're passing on this one for obvious reasons. I like that they're, since 2022 they've been increasing. They're not doing anything with that debt. How much interest are they paying on that debt? That sucks. EPS past 5 years negative, sales past 5 years negative. We've seen way better stocks that have been more resilient through the COVID, so we're gonna obviously pass on this. This is something to check back, probably 1 year from now. 1 year from now. So goodbye. You are the weakest link. Oh, I remember owning this at 7 and then selling it, I think above 10, and now it's back below 8. Yes, I think I got in right here and I sold right there. Wow, so what's happening? 2023, 3.1 billion, right now 3.41 billion. They're profitable, very undervalued. They've got some debt. We'll check that out. Sales past 5 years positive. EPS past 5 years positive. Let's see what institutions are doing with this one. I'm gonna let that load. Yeah, let's run it through our validation calculation. This is non-biased. Okay, market cap is 2 billion, 260 million. Income, they are profitable, 388 million, 320,000. Sales 3 billion, 410 million. Okay. Uh gross margins 40. I mean, this looks really, this looks good looking, honestly. Quarterly, we want. Oh, their profitability is strong. Their EPS looks strong. Gross margins 47, 48, 47, 48, 48, 47. Gross margins strong. Okay. Where's the red flag? Where the red flag at? Where the red flag at? Show me the cash. There's cash. They've got 1 billion in cash. 1 billion, 20 million cash, 680. Debt 1 billion, 921 million, 770. Okay, their cash and their debt kind of wash. Total assets 12.3 billion, total liabilities 9.6 billion. Not bad. Last year, this time, 9.4 billion assets, 6.8 billion in liabilities. 2.6 billion differential compared to about 2.6 billion differential. So more assets compared to 2023. So both assets and liabilities increased about 3 billion overall, which is fine. Quick ratio, they're fine. There's really no red flags that I'm seeing. All right, let's see what we got here. 329 million shares, 610,000. This is a $15 stock. Analysts have 11.92. Goldman 15, Evercore 18, New Street 18, 15 New Street. So Morgan Stanley 650. What happened? Interesting. It seems like the market's got this one wrong, honestly. Institutions own 49%. That is old data. New data, I'm going to say, is higher than 49. 103%, dude. Institutions are loading the boat. I don't disagree with them. I mean, this is absolutely incredible. The way how it's just so severely undervalued. A lot of decreasing positions, but I mean, a, did I read that right? 103% compared to that's a over 50% increase in institutional ownership. That is attractive as heck, man. I don't see why I should not be accumulating this one at the moment. EPS next year, they're guiding lower. Maybe that's why everyone is rattled and scared. Maybe. Um, I mean, this looks really, really promising. Wow. What am I missing? Let's bring it up. Very interesting. Very, very, very. Let's see. Extend. Hmm. I've got to be missing something on this because this looks really good. Earnings 29%. Oh, that's an X. What's why isn't it? It's not showing me what the guidance was and have they beat it. I mean, it's looking good. EPS 1.03. Let's see. They're growing revenues. Uh, gross profit is growing. Yeah, they're already at 1.2 EPS for the year. And they've got one more quarter, and their fourth quarters. Let's just see how their fourth quarters generally go because this is looking way too delicious. 862 million. Their fourth quarters look really strong. 745. This this looks really good. What am I? I'm trying to think what I'm missing here. Let's just go down the line. Shares are being naturally and organically accumulated. However, we can see that now 2024 shares outstanding are 329 million. I think that could be from the unloading we saw right here. This is a lot. And the shares outstanding are going to be coming from big money, privately held shares, not privately, but off the public market. So that makes sense if people are really dumping. Performance year to date negative 42%. I mean, this looks like a no freaking brainer. 2024, 2023, they did 3.1 billion. Now they're at 3.4. That's going to be the that's going to be huge. They went from 2021 1.9 bill to 2.9 bill. They did about $1 billion difference. That's crazy. I mean, I think this stock eventually gets back to 60 bucks. Eventually. If they continue to kill it, I mean, they're going to beat the EPS, they're going to beat the sales. I mean, gosh, institutions and hedge funds own 103%. 190 million shares to the 329. So I like this one a lot. We're going to keep this one open as well. We're going to move on to the next one because we spent quite a bit of time on that. Okay. This is an oil and gas company. Ooh, it's kind of in a bull flag. We've got bull flag here, up, bull flag here. Okay, let's see if we wow, that is insane. Okay, well we see a red flag right off the jump. 2023 they did 102 million, 102 billion. Now we're at 97 billion. Granted, they do have one more quarter to report. Let's just pull this up, PBR. Okay. Let's see what the EPS is looking like for 2024. 3.83 is 2023. Yeah, they're underperforming on the EPS and the revenue. Time to play the game. Q1 23 bill compared to 26 bill, so they missed there. Q2 23.4 bill compared to 22, so they beat there barely. Q3 23.36 compared to 25.56. Oh yeah, they missed by over $1 billion in gross profit there. So they're hurting. Yeah. Institutions own 19%, probably the same or less in my opinion. Not much interest there. How many shares are floating? 3.72 billion. So, are they really paying that high of a dividend? Wow, I've recorded this one before. Yeah, I think we're going down. Um, $12. Watch the $12 area. Um, and it looks like they pay a dividend once a year. That's what it looks like for the last 2 years, but the year before that they paid a couple. So this one, gosh, 150. Let's see the debt. Let's just look at the debt really quick. $47 billion in debt. Total assets 197 billion. Total liabilities 125. That is a lot of debt, man. That's 47 billion in debt. So, I mean, it's not a bad company, honestly. The stock is trading at the same level as it was back in 2013, 2006. Stock trading at the same level as 2006. Man, one giant long cup and handle potentially left-sided cup. Um, yeah, I would want to be on the side for this one. Although it's very attractive, just the sales are really lackluster and the EPS is lackluster, so we're gonna pass. All right, we've got five more to go. Permian Resources. This one's just been a banger. Like, gosh. 2023, 3.12 billion, 2024, 4.83 billion. Absolute banger. Oof. 2023, 540 million shares, 2024, 702 million shares. So they diluted the heck out of you. Don't like that one freaking bit, man. I'm running the numbers in my head. 11 billion plus 1 billion plus it's about 16 billion. About 17 billion. Going down here. Let's see the EPS. EPS is going to crush it too, which is fine. How much debt you guys got? 4.2 billion. So that 17 billion brings out a 13 billion. Total assets 16. I mean, they have 10 a $10 billion buffer between assets and liabilities, which is amazing. This is amazing too here. Love a $3.1 million purchase. Wow, the CEO sold 62 million shares worth, the co-CEO. These guys cashed the heck in. Quinn William Jr. swing trading his stock. He made $283 million. He cashed out 283 million freaking dollars. Wow. So yeah, we're gonna get like a $12 stock in my opinion on this. I mean, they are killing it. The risk you have, and they're guiding EPS next year 1.44%. But the EPS has been on average 10%. So this could be an arbitrage play. We're gonna keep it. We're gonna keep it. We'll just see what institutions and hedge funds are doing here. Not perch. Oops. Okay. 120%. Look at this all-time high ownership. 120% is new data. 83%. That's a 37% increase. That's nuts. That is insane. So this one could be worthwhile. Just know that, are they going to continue dumping shares on you? It's hard to tell, but Watch this one. I would watch it. I don't like how the right side did not come up and surpass the $21 because I would like to see a cup and handle with the right side of the cup being higher than the left side of the cup. So I would watch this very carefully these next few months. Do I want to keep it on the list? No, no. It's a good one, but no. StoneCo. This one's always looked absolutely gorgeous. Um, wow. It's had a really nice move from $9 to 17. It's just dwindled all the way back to 9. Could be an opportunity of a lifetime. Let's see. 2023, 1 billion in sales. Now we're down to 986. But we still have one more quarter to report. EPS 1.02. Let's just check. EPS should be fine. Let's see how their fourth quarters usually do. 236, 267. We need 200. We need about a $280 million quarter for Q4 to get back to 2023 levels. Let's run our calculation on this because it doesn't lie. Okay, 2 billion, 670 million. Income, they're profitable, good for them, 399 million, 230,000. Sales, 986 million, 750,000. Okay, cash and debt. $805,000,000. 560,000. Debt is 1,325,540,000. Crazy. Okay. Total assets 9.5 billion. Total liabilities 6.7 billion. That's a nice, almost a $3 billion buffer, which is good to see. Quick ratio, always been one solid. That's good. Let's go back to the income really quick. I want to check out their gross margins. 26, 29, 28, 35. Gross margins are going down. What's going on, Pedro? That is very interesting. Very, very interesting. Let's continue. 278 million, 30,000. This is a $12 stock trading at $9, okay? But we are on watch for potential revenue miss. So watch that in 2025, November, December. Watch that for late January, early February, or Q4. Other than that, I mean, they look really, 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 really good. Very profitable. What are institutions doing? I'm glad you asked because that is important. EPS over the past 5 years, 23%. They're guiding at 18% next year. I don't see how they don't do well. They've been doing very well since 2019, honestly, very, very well. But the stock price has been, well, there was the melt up, the COVID melt up. But I mean, it's holding its own. Old institutional ownership was 68. I'm saying it's a lot more. 70, 80? 81%. Nice, nice sharp increase right here. So that's good news. I like this one. We'll keep it on display. And the only thing I like about this is this one's a double-edged sword because if their Q4 is not good, I think this probably goes back to low nines, maybe below 9. But if it is good, it definitely paves the way for continuation. And I just want to see, this has only been trading since 2019. Went from 17 bucks to 95. Not that great, but it's pretty cool. So, yeah, just wait patiently on this one. All-time low looks to be around $7.11. So, just wait. We'll keep that one. We like that one. It's not, it's just a wait though. All right, UGI regulated gas. Let's see what's going on here. Ooh, went from 22 to 27. Nice move there. They must have had really positive earnings. Yeah, okay. All right. Ooh, red flag alert. Do you guys see it? 2024 sales 7.21 billion compared to 8.91 billion. They've been on the down slope. They've got some debt. They're a little almost over leveraged there. I think this one's an automatic pass. Look at that money flow though. Holy cow. Okay, we've got to look at this. We've got to look at this. We've gotta. Let's see what they're. They should be okay on EPS. Maybe. Yeah. Total liabilities 10 point. I mean, they're good. 6 billion in debt. Let's go here. That's pretty crazy. 6 billion in debt. I wanted to look at Q4s. 2.1 billion. Strong Q4. 4.1 billion. Very strong. Their Q4s are very, very strong. However, it's just gone downhill since. Very strong, lackluster, even more lackluster. Strong, actually better, lackluster. So Q4 this year, they need, let me tell you, they need a four, at least a $4 billion quarter in revenues. They need that to surpass 2023 and start the trend upwards again. I mean, this is not an ugly stock by any means. It's trading at the same levels as 2014, which probably would upset a lot of people. I mean, this goes all the way back to 1984 at $1. So, yeah, you be the judge. This one's gonna go by. So it's not a bad one. It's let's see what institutions are doing. Institutions on 84%. We're gonna say it's probably a lot more than that based on that chart we saw. 106, not bad. All-time high institutional ownership. So this could be something worth getting into if you have risk tolerance. Just know that it went from 22 to 27 pretty quick, and it's been on a downtrend since 2020, really, unfortunately. So caution ahead, but it doesn't seem bad. They need their revenues are declining, not good. So they need a really good earnings call in January or February. So good luck with that one. We're gonna pass. Vodafone. This one's been, I've done this one several times. I think it used to be $2. Did they do a split? We're gonna see. They did a split. Okay. I mean, it's just been downhill since 2014. Look, yeah, like it's just been not good. 2024, 39. Now we're the trailing 12 months is 35. This is just going downhill perpetually. Yeah. So, I mean, they're a good dividend player, 7, 5%, whatever, but they're losing overall the long game. So, we have to pass on Vodafone. That was a pretty easy decision there. Another oil and gas. Let's see what we got, baby. Baby. Okay. Ooh, potential. This one's been consolidating for years. Please be really good. 2023, 2.3 billion. 2024, 2.8 billion. That's really good. EPS is 0.77. We're just gonna EPS. Oh, we are double that this year. That is, we are looking extremely solid here. Oh, good quick ratio. They're taking care of the debt. EPS next year, solid. Gross margins, okay, they're profitable. I mean, this is looking more and more attractive. So we're gonna put it through the ringer here. I think this is gonna look really good. 3 billion 70 million. Income is 787 million 80,000. They do 2 billion 830 million in sales. I need two more zeros. 2 billion 830 million. Yes. Okay. Cash and debt. I mean, they're looking really good. I'm quite excited about this one. Q1 758 crushed it. Gross profit. Ooh, actually, gross profit did not beat it. They spent a lot more money. Q2 766 compared to 626. Gross profit 229 versus so Q2 they beat. Q3 674 compared to 677. Q3 last year was actually better, although they brought in, I mean, they did bring about the same. So actually getting mixed messages from this one, but gross margins 25, 35, 30, 37, 42, 36, 39. Not bad. Not bad. Let's continue on. Very little cash, 6,070,000. I mean, that's a lot of money, but debt 1,755,280,000. Let's look. Total assets 8.5 billion, amazing. Total liabilities 3.5 billion, that's great. Quick ratio has always been a little sketch, but I mean, it's not in the red zone, you know. Tangible book value per share $7. We'll see what my calculation says. I mean, their debt used to be 2 billion. They started paying it off, so that's good for them. All right. I mean, I'm not seeing any real red flags at the moment. The shares outstanding is going to kill us here. 616,330,000. $8 stock trading at 4.99. Yeah, that tracks. That's good. That's really good. And they're giving away 6% of their cash. So this one has to be, I think institutions and hedge funds have to be adding this one because analysts have 818. What was mine? 801. Okay. 45% ownership is old data. New data is 52%. Any decarbonization added 8 million shares a month ago. Are they up? They're about flat. They're exactly where they are now. Good for them. I mean, this company looks actually decent. Looks really decent. And are they paying the dividends for real? VRN. They are. They are. Looks like we've got a potential cup and handle building. December is going to be a month to really watch and scrutinize. A lot of selling the past year, this last 7, 8 months. Interesting. I mean, it's $5 stock, something you could nibble at. Let's do some charting on this one. It's the last one, so might as well. Trading, how's that? That's a little bit. This is more realistic right there, but this looks right there. So that looks very obvious. This looks, I like this. This right here makes a lot of sense. This also makes a lot of sense. Okay. I want to see this get down to 396. 396 potentially, and then let's look at supports. 286. Supports to the upside 624. That looks good. All right, it's in the thick. It's in the thick right now. There's going to be some good support here. That'll be good. That'll be good. And then just checking our retracements. Go here. This makes a lot of sense. A lot of resistance, 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 breaks through, tests, nice test support, tries to break the next leg up, fails, back to this line. So this is good. So for 360 to 440, this one's pretty decent. I like this one a lot. And it's undervalued by like 50% almost. No, it is 50%. Cool. And they should have earnings in November, December, probably early January. Did they announce it? Oh, they updated Outlook on October 30th. Let's see what they're saying. Okay. Insane. Sure. Okay. Year-end net debt of 2.5 bill. Okay, so okay. Okay, the company repurchased. Okay. So they have 5.6 million shares to purchase back. This is not bad. I think what we could see for this is people are going to buy for December 15th to get the dividend, honestly. And then we could probably see some selling after that because once people get on record for that dividend, they sell, they'll get their dividend. So we'll watch this one January, February for sure. But being a pretty cheap stock overall, I think we have a larger pattern on the brain to really just pay attention to. So this is a decent one. So I think the top four are going to be GPN, PAGS, STNE, and VRN to really, really watch out for. And I think that I like them in this order. So GPN number one, PAGS number two, Stone number three, and then VRN number four. If you made it this far, thank you so much for watching. If you've watched both series, you are amazing. Consider subscribing or engaging with the channel. It lets YouTube know that maybe I'm creating something worth watching to distribute to the audience. Take care, and I will see you on the next one.